For FY26 results conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on the touchtone phone. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities Limited. Thank you, and over to you, Mr. Joshi.
Yeah, thanks, Rutuja. On behalf of ICICI Securities, we welcome you all to Q4 FY26 and FY26 results conference call of Kansai Nerolac Paints Limited. We have with us today senior management represented by Mr. Praveen Chaudhary, Managing Director, Mr. Yash Ahuja, Chief Financial Officer, and Mr. Jason Gonsalves, Director, Corporate Planning, IT and Materials. Now I hand over the call to the management for initial comments, and then we will open the floor for question and answer session. And thanks to the entire management team for posting a strong set of numbers amid such a steep volatility. Thanks, and over to you, Praveen sir.
Yeah, I would request Jason if you can walk them through the presentation. So good evening, everybody. I'll just take you through our investor presentation, which we have just uploaded a couple of minutes back. From a opening standpoint, reinstating our purpose was to create environments for a healthy and beautiful future. Our vision is to design solutions that protect, inspire, and touch lives every day. And on the ESG front, Nerolac has been working extensively over the years, and it is today water positive. It is committed to emission reduction and increasing green energy. From a brand perspective, for over a century, Nerolac has stood tall as a heritage brand, symbolizing excellence and innovation in the paint industry. Our strength lies in robust R&D capabilities and strategic technology partnerships, particularly in the industrial segment, where we deliver cutting-edge solutions across diverse applications. Despite intense competition, Nerolac continues to command attention, proudly holding the position of the second most recognized brand in terms of top-of-mind awareness nationally. One of our most enduring assets is the Nerolac jingle, a cultural touchstone that has resonated across age groups for more than 3 decades. This timeless melody continues to reinforce our brand identity and emotional connect with consumers. Building on our century-old legacy, Nerolac continues to shape the future with breakthrough product innovations. Our sustainable solutions reflect a deep commitment to progress, responsibility, and customer trust, ensuring that we not only meet today's needs, but also safeguard tomorrow. Looking ahead, this same technological edge will increasingly shape our decorative segment, enabling us to introduce breakthrough concepts that align with the growing demand for premium products. A prime example of this is our range of products which are exclusively category-defining products launched a few years ago, offering Indian consumers a truly differentiated experience in decorative paints. Commenting on the business environment, what we have seen this quarter is that there has been a significant surge in crude oil prices, primarily because of the West Asia crisis. There has been a sharp depreciation in the rupee. The West Asia crisis has created a lot of uncertainty. There is a supply chain disruption which has happened. Demand in automotive has continued to be healthy, and there is a continued focus of the government on infrastructure. I will now talk about the decorative segment, in which we will talk about the key elements of our decorative strategy, which are built on 5 elements, which are new products, new business, the projects business, influencer program, branding, and marketing. Coming to our new products, we have tried to bring out the salient details of our new products. I will just touch briefly on each of them. Our first product is Excel Sheen, which is a modified acrylic emulsion with silicone additive, superior sheen with best-in-class dust pickup resistance and anti-algal performance across all weather conditions. Excel Everlast 14, India's first self-cleaning paint powered by Japanese PU silicone hybrid technology with anti-algal encapped technology, delivering unmatched beauty and performance. Excel Everlast 20, which is India's first exterior paint with 20-year warranty. It is engineered with bulletproof nano-silica technology for superior durability, crack bridging up to 2 mm, and weather resistance. Beauty Gold Washable Plus, which is an interior emulsion with rich sheen finish and 1.25 times higher washability than competition. It's the only paint in the category that has both antibacterial as well as it's the most washable product. Perma No Heat. Perma No Heat is a heat-reflecting liquid applied waterproof coating based on acrylic copolymer emulsion. It reflects visible radiation and infrared rays, thereby reducing the surface temperature by up to 15 degrees. Soldier Rain Raksha is a high-strength fiber-reinforced elastomeric liquid applied waterproof coating. It is formulated with resilient acrylic copolymers and reinforcing fibers. Coming to the new growth drivers, in the new business, we have had robust growth in new businesses, and the saliency of new business has increased further compared to the previous quarter and for the year. The project business has also expanded to more towns. It has registered a high double-digit growth, and the saliency of projects for KNP has further increased. We have given some of our marquee projects that we have painted: the Jharkhand High Court, the Vidhan Sabha at Raipur, and the General Pool Residential Accommodation at Raipur. Coming to our influencer program, Paint as a Service is today present in more than 250 cities, and we continue to invest aggressively in the next gen service. Our architect and interior designer program, which is Illuminati, today is present in more than 45 plus cities, and it is also growing healthily over last year. Our secondary program for painters today covers more than 1.2 lakh painters which are associated with the program, and secondary salience to primary has also significantly increased. Coming to our retail platforms, we had two platforms earlier, which was the Next Gen Shoppy and the Shop in Shop. We have now evolved and migrated to a new retail platform, which is called the Nerolac Paint Plus Zone, and almost 250 plus stores have been opened across India. Coming to branding and marketing, our brand and marketing investments have remained strong with impactful campaigns running across both television and digital platforms. These initiatives are designed to deepen consumer engagement and reinforce Nerolac's identity in the mind of the audience. The Ghar Ki Raunak program or campaign has beautifully captured the emotional essence of home, strengthening our bond with consumers by celebrating joy and pride of living spaces. In addition, our association with the Asia Cup has amplified our visibility on the national stage, connecting Nerolac with millions of passionate fans and further cementing our position as a brand that resonates across diverse audiences. Together, these efforts showcase Nerolac continues to blend heritage with contemporary relevance, ensuring our brand remains vibrant and top of mind. Now coming to the industrial business, the industrial paints serves diverse applications and thus creates diverse business opportunities in the three segments of powder, general industrial, and high performance coating. And as is seen, we have shown some areas in each segment that the company is present in. Coming to new products, our focus has been on enhancing finishes and functionality, offering versatile applications, and prioritizing environment sustainability. Some of our products we have tried to spell out here. In the passenger vehicle segment, we have introduced products which are energy efficient, wet on wet systems, structural primers for chassis, as well as premier clear finishes. In the 2 and 3 wheeler segment, we have introduced low bake technology. We have got anti-corrosive underbody protection products and high gloss clear coats, which we have introduced in this year. For commercial vehicles, we have introduced super low bake color coatings, anti-corrosive casting sealers for castings, and clear adhesion promoters. Now, when it comes to high performance coating, again on the same three platforms, the development has taken place. And in general industrial and high performance coatings, We can see that some of the products which we have introduced is highly flexible RoHS compliant coil coatings, which withstand severe forming operations, high performance outdoor coating systems which have long-term UV resistance, and thermal insulating coatings. For powder coatings, we have introduced low bake one-shot matte powders, fusion bonded epoxy top coats, and coatings for furniture and consumer durables which have got high scratch resistance properties. Coming to the performance highlights of industrial, passenger vehicles, as I mentioned earlier, has had healthy demand. New models and SUVs continue to support the passenger vehicle growth. Three-wheeler segment, double-digit, and growth was supported by low interest and easy financing options. In the commercial vehicle and tractors, again we have had double-digit demand, and harvest season supported this demand. In addition, we have new segments where further increase in saliency of specialized products in passenger the company's thrust. In the ARF business, as far as the business growth is concerned, there has been moderate demand. There has been a thrust towards premiumization, where the saliency of premium products have increased, and there's an active conversion of body shops from solvent-borne coatings to water-borne coatings. And there is a lot of digitalization of service operations which is being undertaken to improve the customer experience and interaction. In performance coatings, the liquid segment witnessed very strong growth, and we maintained the premium saliency. In powder coatings, the demand showed good recovery in Q4, and we witnessed mid-single digit growth. Channel sales witnessed very good growth. Among the accolades which the company has won, it has won quite a few accolades during the year. In decorative, we have won the Dragon of Asia Marketing Awards in Q2 25, where we won 6 awards for the Dukan It Yourself campaign in the Mahakumbh. We won the Gold Winner Ambient Media Award, the Gold Fest Award, 7 Baby Blue Elephant Awards. In industrial, we have had some excellent awards, one from TAFE at the Global Supplier Meet 2025, where we were awarded the Best Supplier Award. Toyota Kirloskar Motor Company has awarded as the Best Raw Material Supplier. Maruti Suzuki has given us the Superior Performance in Safety Award. Suzuki Motorcycle has given us the Best Vendor Award, and as well as the Cost Down Award, which we got from Suzuki Motorcycle. Coming to the area of ESG, KNP was rated in the B category in climate change and water security in the CDP cycle 2025. We have been awarded a bronze medal in EcoVadis. The result places KNP among the top 26% of companies assessed by EcoVadis 2025. We have been recognized in the strong category by CRISIL ESG Ratings 2025. We have been rated in the top 12 percentile companies within the chemical industry group in the S&P Global Large and Mid Cap ESG Index 2025, and we have been rated in the top and ranked 20 out of 577 companies in the chemical industry and have received a low rating, indicating lower ESG risk in 2025. Coming to our CSR initiatives, we remain really committed to bring positive change across multiple dimensions of community well-being. Our efforts span skill enhancement, ensuring environment sustainability and community development, while also prioritizing preventive healthcare and sanitation. At the same time, we continue to invest in promoting education, empowering individuals, and fostering inclusive growth. These initiatives reflect Nerolac's ongoing dedication to giving back in a sustainable way, creating impact that uplifts communities and builds a brighter and healthier future for all. Coming to our financials, for the Q4 on a standalone basis, the revenue growth is 7.6%, PBIT was up 21%, and PBT before exceptional items was up by 12.8%. For the year on a standalone basis, net revenue is up by 3.2%, PBDIT is up by 1.2%, and PBT before exceptional items was down by 0.9%. For the consolidated basis, growth in quarter 4, revenue was up by 7.5%, PBDIT was up by 30.6%, and PBT was before exceptional items was up by 23.2%. For the full year, on a consolidated basis, net revenue is up by 2.9%, PBDIT was up by 3.4%, and PBT before exceptional items was up by 1.4%. We have improved our working capital during the year, though the number shows an increase, but our special focus has been on reduction on inventory. The number of increase is because of investments. As far as the dividend is concerned, the board has recommended a dividend for the year of 250%, which comes to 2.5 rupees per share. When it comes to capex, the capex is more or less normal and in line with previous years. Coming to risk and outlook, among risks, West Asia crisis leading to supply chain disruptions is one of the key risks that we see in this quarter. High commodity prices due to crude oil price surge and impact on downstream products. Import cost surge due to rupee depreciation. And as far as the outlook is concerned, as per RBI, construction activity momentum will be sustained. Paint price increase on account of steep material inflation is being taken, and considering the inflationary scenario, demand visibility remains more or less a wait and watch. So with that, I am at the end of the presentation, and I now open up the floor for question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Nuvama. Please go ahead.
Yeah, thanks. My first question is overall competitive intensity. So we have seen severe cost inflation last 2 months. As a result of that, we are seeing price hikes by almost all the paint players, including new players, fairly being similar. On advertising promotional intensity, are you seeing some reduction from the new players? Because they have never seen, obviously, this kind of inflation given their very short cycle. Any evidence you have seen, either free grammage or in terms of dealer incentive?
Yeah, so as far as we understand from our sources, that on economy, the free thing has been withdrawn, but I don't know. I mean, there's a mixed response always comes from the trade, but I don't know what is the policy. But that's what we understand. On this thing, advertisement, I think whatever we have seen in month of April was committed much before this geopolitical problem and inflation. So I think, they would have to go through it. I don't think there's much option left. Now it remains to be seen as to remaining months in quarter 1 and quarter 2, because this time Diwali is late, so we might see some adjustment there. It might happen. But as far as current quarter is concerned, I think April being committed, I think that intensity, we could see that it was there. I mean, people spend money on advertisement as well in month of April.
Right. One related question is generally when we see sharp inflation in FMCG paints, local players lose market share. Now, you are a respectable player in the legacy overall market share, but overall your size is much smaller than, say, the 2 legacy players, and the number 1 new player is also very aggressive. In that context, are you gaining from the local players, or are you now starting to lose some more share to these 3 players, given you have a overall pricing which is a bit delayed in the B2B, and definitely those 3 players, those 2 legacy and that new player are very aggressive. So overall you see this situation as a positive or a negative?
So it's very difficult to estimate, how much unorganized players are gaining or losing. But we believe, I think they are there in the pockets, and in difficult times they go down and again they, emerge again. So very difficult to say as to whether we are gaining or not. But what we are definitely seeing is since November, there has been constant uptick in the market, and I think that is a positive sign. and this trend is only improving. Now, if I talk about November, December, Jan, there was no sign of any war or nothing of that sort. It was pretty stable. Raw materials cost was benign. So I think with that thing also, so overall I think market is quite, I would say bullish in a way for decorative. And this might be temporary pause, I would say, for unorganized sector, but remains to be seen. We have no data as such to really support that, and very difficult, I would say.
Sure, thank you. That's all from my side. Thank you.
Right, Avnish. Thanks.
Thank you. The next question is from the line of Mihir Shah from Nomura. Please go ahead.
Hi, sir. Thank you for taking my question, and congrats on a good performance. So firstly, just a few bookkeeping questions. What was the growth between deco and industrial, given auto sales were relatively strong this quarter again? So what is the difference in the growth in both of those key segments? Also in deco, if you can help us understand the volume growth and mix impact for you. Last quarter it was quite negligible, but what was it for this quarter? That's my first question.
Yeah, so as far as volume value gap for decorative is concerned, it is again not very significant, and I think that is how I have been stating right from quarter one that our focus is very clear. We will be focusing on select market where we want to gain market share and concentrate. Second thing is profitable mix is very, very important. So we have cautiously, curtailed our sale into items which are not profitable. So that might be seen in terms of value, but I don't think, that's very critical going forward. I think profitable growth with good margins and decorative is the key focus, and we are confident the progression that you're seeing from quarter one to quarter four, I think that journey, I think we are getting a lot of confidence now that I think we are on the right path, and I think there's no point in getting into this mad rush of market share at any cost anywhere. That is not the idea. I think, it's important to deploy resources carefully, and it's a time where actually resilience will matter, and I think if we pass through this, I think future is very bright for decorative concern. So that is the roadmap that we'll have in future also. As far as auto is concerned, auto did grow in double digits, but we also have very sizable presence in industrial, which grew by single digits. So overall, I would say it was mixed, slightly, mid digit plus as far as industrial is concerned, and as far as decorative is concerned, then obviously it will be also in that range. So overall, I would say very balanced growth this quarter, and that too, I think, with the good improvement in contribution and overall profitability.
Understood, and thank you for the roadmap. That makes, this brings a lot of clarity there. So secondly, on the cost inflation that we are seeing, if you can highlight the kind of price increases that you have taken that will sit in 1Q from here on. Also, given that you have a higher exposure to B2B players, historically we've always seen Kansai seeing some initial pressure on margins because the price hikes from B2B usually come with a lag. So how are your discussions with the B2B players? When do you expect the price hikes in industrial business to come through, and the kind of price increases that you've taken in deco?
Yeah, so deco, I think we were the first one to go in the market with price increase. So first increase we took in month of March itself. About 26th March we took the increase, and then followed by 10th April, followed by 21st April, and now it will be 11th May. So this price, this March was about, I think, 2%. After that, it was all 5 to 6%. So net, I would say, will be higher single digit as far as price increase is concerned in decorative as of now. And in industrial also, I think auto also we are very strong in terms of negotiation. We got a good breakthrough. There are price increases which have been granted. But obviously, it is not, I can't say it for entire auto, but one thing is very clear that it might be slightly delayed negotiation, but it is always with effective from. So I think that is very important. So I think with that in mind, I think we are not losing out on inflation as far as profitability is concerned. Maybe it will be slightly here and there in terms of timing. In case of industrial, there is a good mix of OE as well as channel. Now, when it comes to channel like decorative, there also we announced the price increase, and that new prices are effective mid-April itself. Overall, I would say it's a pretty satisfactory price scenario, and I think we are very cautious about our overall profitability when we are getting into the business, and that is how the team is working on. I think as far as our investor community is concerned, I would urge, don't look at it quarter-wise what is happening. I think it's important to look at on a longer run as to how is our overall strategy and direction is concerned. But as far as profitability is concerned, definitely, pressure is on the team in terms of taking the price increases, and direction is fairly positive. That is what I would like to comment.
Got it, sir. Thank you very much for that. So lastly, can I ask you if there is any margin guidance for FY27 that you would like to share? Where do you think we will probably be aggregating towards for FY27 on console and standalone both?
Yeah, so like historically we have been talking about 13 to 14. I think that is what endeavor is. This year also I think we were in that range only. So definitely we would be there. Though our endeavor is always to go on higher end, but as of now I can leave it at that.
Got it. Thank you. Wishing you all the very best.
Thank you, Mahesh.
Thank you. The next question is from the line of Rehan Syed from Trinitra Asset Management. Please go ahead.
Hello, audible?
Yeah.
Good evening, and thanks for taking my question. So I have two questions regarding your margins and cost structure side. So first is around your material. So given the crude inflation and rupee depreciation, so what is EBITDA margin sensitivity to a 5 to 10% increase in input cost that we have shown in this quarter?
I think I could not hear you, but if I understand question correctly, you are talking about inflation and its impact on profitability. Is that right? Is that what you want to say?
Yeah, sure.
Yeah, so as I explained earlier, I think we are going ahead with the price increase and trying to pass on inflation as much as possible. Second thing, there is an inventory that also we carry both on FG and RM. So to that extent, there is a cushion available. But obviously, the inflation already taking place will come in effect sometime. But we are hopeful that by then price increase also kicks in. So our endeavor is to neutralize. So some impact cannot be ruled out.
Oh, okay. And so on second question on the industrial segment side, that you have increased reliance of specialized products in passenger vehicles. So what percentage of auto coatings revenue now comes from these high value products? Could you just tell me?
Yeah, so being a leader there, I think our endeavor is to increase penetration into each vehicle that gets produced. So in a vehicle, there are many areas which are still unexplored. So we are trying to tap that each surface if there is a paint application that is possible. And now the areas which are left are very niche, but they are very, I would say, premium in nature. That is the one area which now we'll tap, so that more of a car, I think, is our endeavor, and that's the specialized paint we talk about.
Okay, and just continuing with this part on the performance coating and powder coating showed recovery and growth in the quarter. So what is the current utilization level in these segments and capacity headroom for growth going forward?
Yeah, so in case of industrial, I think in powder and industrial liquid coating, we have sufficient capacity. We should be operating about 70.
And so, I said you haven't answered the second part, like segments or capacity headroom for growth in this segment.
Sorry? Not able to understand the question.
Like you have answered the current utilization. I am asking about the segment capacity headroom for growth in this segment.
You are asking for outlook.
Like yeah.
Yeah, so I think like we have been reporting, in growth areas like performance coating, we have been growing in double digit. So I would say that's our endeavor. I think in infrastructure spend, as long as it keeps happening, and we start expanding a segment which I had briefed in our strategy session in month of February. I think that's our endeavor to really grow double digit as far as performance coating is concerned.
Okay. Thank you.
Thank you. The next question is from the line of Ranmay Joglekar from Asit C. Mehta Investment. Please go ahead.
Hi, sir. Good evening. I hope I am audible.
Yeah, you're audible.
Yeah. So historically, Q4 has been a sequentially weaker margin quarter for us because of the mix being tilted towards industrial. This time, if we see the margin pressure sequentially was much lower compared to some of the historical Q4 numbers. So is it mainly because the scale was a little better, we are improving sequentially, or any other factor that you would like to highlight here?
Yeah. So one is in both industrial and decorative, of course, performance is better. And in decorative also mix-wise we are far better than last quarter. And that I think has resulted into overall contribution improvement.
So mix you are saying individually in both industrial and decor?
In both.
Okay.
In both.
Okay.
Yes.
Great, sir. Great. And secondly, after the price hikes that you mentioned, the 4 set of price hikes that you have taken, have you seen any impact on volume so far? I know it's not a long period since the price hikes have been implemented, but any color you can give on how the volumes are shaping up?
As of now, frankly, there is no impact we have seen. And if really this geopolitical situation, obviously someday we believe it is getting worse, someday again we think, it's now not ending. But I hope if things change, I think we should be in a stable zone as far as quarter is concerned.
All right, sir. Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Purohit from Elara. Please go ahead.
Yes, sir. Hi. Thank you for the opportunity and congratulations. So I just wanted to understand on your outlook for the next year. You indicated that November you've seen an uptake from an industry growth perspective and for you as well. And the context that till now you haven't seen any significant negative impact. But how was the trend in terms of secondary sales now? Probably much of the activity would be primary or the secondary sale also because price increases have been taken. So stocking up might be happening. How do I assess for the full year if you could just give some sense on the industry growth?
Yeah. I mean, frankly, difficult to predict at this stage. But if I have to go by the recent trend of last 5 months, if that is anything to do with the overall market and economy, for economy which concerns paint industry, I think there has been significant improvement in all the verticals. I think if that is the indication which was pre-war, that means there is a fundamental things are getting corrected or changed. I would say that's the green shoot that I'm seeing. And if this war gets over, soon, I think then there should not be any impact as the overall year is concerned. But of course, if this gets dragged on and then it starts impacting our daily lives in terms of fuel increase and all those other costs going up, then I think it is anybody's guess. And if it happens to us, it might happen to entire, I would say, other sectors also which are consumption driven. But it's like a very difficult to guess as to what will happen. As of now, I am only relying on past 5 months trend, and I am pretty hopeful that if that trend has to sustain, I think we should have another good year, I would say.
And so lastly, on the project side, which is your, if you could give some indication on the new initiatives, new businesses, and the project, what would be these as a percentage of our total sales in terms of contribution?
Project in the sense decorative projects you are saying?
Yes, sir. Yes.
I think decorative project should be now about 10% plus. Yeah, 10% plus.
And the new businesses, which includes waterproofing, construction, chemical, and even the wood finish.
I think that also should be 10% plus, but slightly on a higher side than projects.
Okay. That's it. Thank you so much. Okay. All the best.
Thank you. The next question is from the line of Pratik Gothi from HSBC. Please go ahead.
Hello.
Yeah.
Am I audible?
Yes.
Yes. Hi, sir. This is Pratik Goti from HSBC. Thank you for taking my question. I have two, please. On dealer incentives, if I remember correctly, dealer incentives were increased across the board by all companies, I think, when input costs were benign. Have you seen incentives lowered now that cost inflation is back? This is for you, and if you have a comment on the industry dynamics as well, that will also be helpful, please.
See, dealer incentives is also function of, time, and it varies month on month. And April typically is also high stocking month, otherwise also. I mean, forget this year with war and price increase, it could have been slightly accentuated, but otherwise also it happens. So I would say it's very difficult to comment on just 1 month of this inflation, what will happen. But I think it is pretty much in line with what we would have seen otherwise also in last year or otherwise. Now it remains to be seen that if this inflation persists in next 1 or 2 months, then what happens? And definitely, whenever there is a price increase that happens, incentives are obviously adjusted to a certain extent. That is a normal practice which always happens in the industry.
Understood. And on paint demand, if we split the deco markets into projects business, construction chemicals, wood finishes, and what we can call as core retail deco paints business, basically business that goes through the dealers, have you seen any improvement or growth in the core retail deco paints business?
Yes, we have seen improvement.
Okay, and in terms of mix, you mentioned that mix had improved for you. So can you give more color over there? How is that mix improvement coming about? Is that Nerolac Plus range that you have, or any color on that would be helpful, please?
Yes, so if you would have, I think in presentation, this time we detailed out on a new product. So in a Q4, I think a new product contribution is very high. I think that is one thing is contributed. And all these products are launched in emulsion category, which is obviously as such as a mix it is considered premium. And in that also when we classify the economy premium, super premium, there also super premium has done well. I think that is the direction that obviously has taken. So new product in that also it's a super premium doing well. I think all in all that is why I call out as the overall mix being better.
Understood. Okay, that helps. Thank you.
Thank you.
Thank you. The next question is from the line of Tejas Shah from Avendus Spark Institutional Equities. Please go ahead.
Hi, thanks for the opportunity, sir. Sir, did I hear you correctly that you said that we focused on market share gain and we have gained market share in some focused market?
Yes, you're right.
And sir, which region or which markets this would be?
No, it is, when we talk about focus market, it is pan-India. It is not like northeast. So there are, specific strategies for each towns, and we are focusing on that to really gain share there. So that is what is working very well now.
And so this would be urban largely?
I would say T2, T3 mainly.
T2, T3. And sir, just wanted to understand the character of the competition which is now put to test. And then this time, I think there are two new players who are actually facing this inflation for the first time. And thankfully, we have seen that at least the large listed players have taken price hike. But how the new competition is behaving and how the long list of or long tail of unorganized or large unorganized guys are behaving in this environment?
I think, they also took price increase. In fact, they had announced price increase much before this war itself, one in Jan, one in Feb, because they were anyway, I think, below market standard price. So they wanted to reach that gap. That is one. But after that, again, this inflation has hit, and I don't know as of now whether really they have taken further price increase. Now, so as far as that remains, in terms of what competition is trying to do, which is a new entrant. And on unorganized sector or small player, obviously, there'll be impact which they'll have because of their capacity to absorb the inflation. And more than inflation, I think it is availability also which is causing the trouble. So definitely there'll be some, I would say, impact that might be happening with unorganized. And in month of April, typically, it's a big stocking month. So as such, inventory is stocked of all the leading brands. So in this month, really, it's very difficult to say that whether unorganized got impacted and there is a sale that shift is happening. Very difficult. it will be only seen in next, I would say, 3 to 6 months, where that impact is really been seen, where there is extraordinary demand that is coming of certain products. And typically these are, low-end products like primers and all. I don't see, there'll be super premium, emulsion category, there is a major play. So it's all standard products, which I don't think will be any significant as far as we are concerned.
So the last question, our margin guidance of 13 to 14%, is it assuming ceteris paribus on raw material to stay like this, or there is a built-in assumption that second half they kind of reverses and gives us some room to have that benefit?
Yeah, I think there is a strong, I would say, belief that things will change. I think we are seeing some signs, and some of the raw material prices also got corrected now. I think the temporary surge that happened because of this uncertainty and panic, I would say, is now stabilizing. So we believe that I think things should stabilize. Quarter on quarter, very difficult to project because timing-wise there is always an issue. But I think overall, I think things should be better.
Thanks. That's all on my side, sir. Thanks.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Yeah, hi, sir. My questions have largely been answered. I just wanted to clarify, you say on the decorative growth and industrial growth this quarter, could you I missed that comment, sir. If you could just repeat how much was the growth momentum in each of the segments?
Yeah, so, in industrial, I was saying, there was a reference to auto being double digit. I said, yeah, it's close to double digit. But we have also an industrial section, which is also large, and that is where, my answer was in relation with the strategy where we focus on extremely premium profitable mix now, and we are doing away with all low-end non-profitable items. So with that, I think I was that's a bit concern. And even Deco, I think we were pretty much mid-single digit or lower than that, around that. So I think overall, I think it's better show as far as.
Got it, very clear. So just on that front, on the industrial side, I mean, as we move now, there is obviously some inflation concerns, but auto industry, is my understanding correct that the growth momentum has sustained till this? Because there was a clarification that you said that in decorative, the demand momentum has sustained, but is industrial also the similar kind of situation? Especially autos.
Yeah, it is. Building on.
Okay. And sorry, if I may, just from a thought perspective, would that increase the ability to take price increases in that sense? Or is that, would you agree, or what your comments on that, sir, would be helpful?
No, I think even otherwise also, I think whether it's a low phase, high phase, I think, definitely we are looking at margin, and hence, there is something which we will not forgo, and we make after price increase. Now, if you look at the scenario, actually, this is not a standard kind of a thing. The entire raw material has undergone change along with dollar appreciation. So I think customers are listening very carefully, engaging, and I think based on justification, they have already started giving us price increases.
Okay, sir. So some price increases already happened. Any quantum?
In auto, it's very difficult, Avi. You will appreciate that.
Okay. No, fair enough. So that's all from my side. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, sir, the price hike in decorative, effective price hike would be, I guess, in low teens for us as well as the industry, I guess. And if the war ends and if crude corrects materially, so will there be price cuts, or we will try to increase ad spends, or we will try to increase the margins? So what will be the strategy of the company? Question number one. And in terms of how do you see the outlook for FY27, considering there will be steep inflation, not just in paints, but in general, there is a possibility of material inflation in across commodities in India. So how is the outlook? And if you can share outlook in terms of decorative projects, as well as industrial and auto? Yeah. Thanks, sir.
Okay. So, auto, as I said, it looks like demand is pretty strong, and most of our customers are talking about long waiting lists as far as their products are concerned. So we are hoping that things should be okay for auto as a whole concern. In other industrial segment also, we are not seeing any change. I think infrastructure and even otherwise appliances and all that is going pretty standard and normal. So we hope that also continues. Coming to deco, I just mentioned about last 5 months trajectory, and I think that has also gone through April. So we believe that things should be okay as far as deco from demand perspective is concerned. Otherwise also, unless something dramatically happens and there's an inflation which is beyond means and what we saw maybe 3-4 years back, then of course it's a different story. But as of now, it's too difficult to assume and have extreme assumptions in both ends. Very, very difficult. I mean, it's like a crystal gazing. Now, as far as price, inflation or deflation, I mean, if inflation continues, then obviously our price increases are there, and we might take further price increase. Second thing is, if there is a deflation that happens, then typically what industry does in the short term is obviously the scheme gets adjusted, and if corresponding deflation, if it is making sense, is always passed on. That happens. When price increase is there, scheme gets adjusted. Reverse also happens when there is a deflation in a short period. Obviously, if there is a sustained stability we see with the deflation, then obviously price will get corrected downward. But we don't see that happening, and the reason is crude of 60 or 70. I don't know whether we'll go back so soon there, and the structural imbalance that got created with all this shipping lane disturbed and all of that, I think also might take some time to settle in. So I think we have to live with the situation, I guess, for next 6 months with this. And if things improve, then maybe second half we might see a dramatic change. That's what at least I believe, and that's how we are working with. Yeah.
Okay, sure, sir. Last question. Assuming crude settles at let's say 100, will there be any requirement to take further price hikes, or current price hikes of low teens are in a way sufficient?
I think with 100, I think it should be okay.
Okay, sure, sir. This is very helpful. Many thanks.
Right. Thank you.
Thank you. The next question is from the line of Sid Gandhi from IIFL Capital. Please go ahead.
Hi, sir. This is Percy Panthaki here. I just wanted to ask one question on the other expenses line for this quarter. It is down, and it's in terms of basis points, it's about 150 basis points down YOY as a percentage of sales. In absolute terms, it's about 1.5% down YOY, while the sales has grown at 7-8%. So can you give any reason why there is such a big 150 basis points kind of saving in this cost item?
Yeah, so if you look at absolute increase from last year to current year, it is same, right? So because of sale increase, you are seeing the drop out there.
Yes, but as the scale of the business increases, these costs would also normally increase, right?
No, there is a fixed cost leverage. Optimization is also being done. So that also I had mentioned earlier in quarter. So we are also looking at cost efficiency, spend efficiency. All that is also coming in now.
Okay, so there is no full year truing up in Q4 which is causing this movement, is it?
No. Yeah.
Okay. Yeah, that's it. That's all from me.
Right, Percy. Thank you.
Thank you. Participants, to ask a question, you may please press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. So you may please go ahead. We don't have any questions. Any closing comments from your side?
No, I think nothing. Thank you so much. I think it is first time we conducted our investor meet in the evening at 5:30. So thank you all for joining and hope to see you in next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.